So this will be our last segment in my series on mortgage terms. So hopefully you've been able to listen to several of them and get a better idea on what we're talking about when we're talking to you about mortgages. And hopefully you've got some more knowledge and can look up things as well. So the last three things we're going to talk about are contingencies, earnest money deposits, and also rate locks. So when it comes to contingencies usually are on contracts, but they can be loan contingencies as well. Things like an underwriter might need you to pay off a car or pay down a credit card. A lot of times we call them, loan commitment or loan approval conditions, but they're contingencies of the loan. Basically, you have to do something before the loan can be finished. Contingencies on a contract can be something like maybe you had an inspection done on the house and a door needed to be fixed, or the dryer didn't work, or something needed to be fixed at the house, or the seller was going to give you money at closing as a contingency to fix things or whatever. If it's a contingency for fixing things on a contract, those things have to be done and have to be checked out by the lender, basically an inspector we send, prior to closing your loan. So just keep in mind that anytime there are any contingencies on a loan, that means it cannot close until those contingencies are cleared. So if you have any questions, obviously you can always put comments in the bottom or call me. The next thing we move on to would be earnest money deposit. We call those EMDs. Again, earnest money deposit. It's not really hard, but now that you know what it is. That's usually, or not usually, that is the money that you put down as a deposit on your contract. Whenever you have a contract or you write a contract to purchase a home, you can't just write the contract and then your realtor sends it. Usually you have to agree to put money down. Sometimes it can be as little as $500 or $1,000. Sometimes it could be as high as $20,000, $30,000. It just depends on what your realtor feels like the negotiation will work better with that seller. And once you put that down, you turn in the money usually to a title company. It's held by a third party, so you're not giving it to the seller right up front. Nobody gets any money until the closing, the actual closing, and that is usually done at a title company or a title attorney. But again, the earnest money deposit is money that you put as a deposit on your contract or your request to purchase this home. At the end, we do take that as a credit to you. We do give you credit for that, and it is considered part of your closing costs. So we do, if say your closing costs are $10,000, you put $5,000 as an earnest money, then we would only require another $5,000 plus closing costs. And sometimes the seller pays closing costs, so maybe you'd only need $5,000. But anyway, that's what your earnest money deposit is. And the last one I want to talk to is rate locks. When you call in and ask for a rate, a lot of times it's just the daily rate. We've kind of talked about this in other, other forums. Just because you call it in and ask for a rate does not mean that's the rate that's going to be on your loan, but that rate is not locked. Whoever, tells you that rate or whatever you get is not locked until you actually put an application in and then further get a contract. Sometimes we can lock a rate ahead of time when we're running special programs, but usually we lock the rate when you get your contract, because the best time for rate locks is a 15 or a 30-day rate lock. That way you get the best rates. If we have to do an extended lock, like a 60 or a 90-day lock, then your rate is going to go up. It's going to be higher if we have to do an extended rate. So again, basically, when you are asking about rates, those rates are not locked until you have a contract. Once you get the contract in, I will then be calling you and saying, hey, here's what the rates are today. Do you want to lock it or do you want to float? Float obviously means you're not locked. So that means if rates go up, you could get a higher rate. If rates go down, you could get a lower rate. So rate locks are usually 30, 60, or 90 days and are usually done when we have a contract for you and we know when you're going to close. So that wraps up my series on mortgage terms. I hoped it helps. I hope you learned a few things. If you missed any of the videos, you can wrap it up with the links below and take a look at some of those. And again, thanks for watching, and I hope I was able to teach you a little bit about mortgage terms. Dawn Hall, Van Dyke Mortgage, 239-789-7561, your lender for life.